Patrick, also known as Dynamo DeFi. You might have seen him on YouTube or on X. He's been one of the DeFi KOL OGs in the space. I think since 2021 or 2022, I started watching your YouTube channel when you were still at a few hundred subscribers. And you're now with DeFiLlama, and you guys recently launched Llama AI. So that's going to be the center of the pod today. Thanks a ton for joining, Patrick. How are you doing?
Yeah, happy to join. And yeah, I started making videos in the first half of 2021, and which I guess it felt very late at the time. It's funny, shows you how these things go, right? Like I felt like I was very late to DeFi because I wasn't making videos yet, even though I was using it during 2020. And then it turns out like now it's probably most of the time that DeFi has existed as an industry. But yeah, it's been a journey, and like you mentioned, now I run revenue and growth for DeFiLlama, so that's fun as well. And I think probably many people who watch this are already familiar with DeFiLlama, but it's one of the, I would say, the top dashboard for DeFi data. We track fundamentals across thousands of projects.
Nice. Are you like, how did you end up at DeFiLlama? Like, that's not the typical company
Mhm.
where, let's say, people who are mostly doing X content or YouTube on DeFi would end up at. But I think it's a very, very interesting journey. So, how did that all develop?
Yeah, good question. So basically, well, here's a couple lessons. I'm gonna turn this into lessons for people. First is like, don't be afraid to cold or warm DM people, because I had known the founder of DeFiLlama going back several years, going back to 2022, just because I use their charts a lot in content. So I post DeFiLlama charts on my Twitter, like used to be several times a day, even before I was working there. Reference them heavily in my YouTube videos as like fundamental analysis. And I had just at one point cold DM'd OXNGMI, the founder, to say, hey, like love what you've built. I reference it a lot. Like, what's your perspective on how I'm looking at this metric? Like, do you think that this is the right way to look at it? And basically, that started uh, us getting to know each other. And so throughout the years, like I've built some things with their API. I used to volunteer to write some tweets that they would tweet out from their Twitter account, um, and just built that relationship with them, being in the with the team being in the industry. And then last year, actually almost exactly a year ago, DeFiLlama was uh, hiring someone for marketing. But previously they had no one for marketing, no one for sales, like no one for any of those sorts of things. And and so the founder asked me if I wanted to come on part time, since I had already been basically doing a lot of marketing for them already. I think if you search DeFiLlama on YouTube, I already had like two or three of the top five most viewed guides on how to use it. So I took over growth for them. Come new administration in the U.S., we started getting a ton of inquiries from TradFi, from even government agencies who wanted DeFi data. And as the resident docs guy on the team, because everyone else on the team was anonymous, um, I also became the de facto sales guy. So still all part time. So I was also took over sales, which then basically led to it was so overwhelming. And like I see how fast the team ships. Like m- most companies, you're lucky if you ship a product update like once a month. At DeFiLlama, for new products, we're often shipping multiple times a day. Like we launch something and ship multiple times a day, and like getting feedback from different people throughout the day, and just having a really tight iteration loop. So I was like, okay, this company is going places. I want to be a part of it, and it's one of the few, I think, honest actors in the industry. Um, so I was able to come on full time, and then eventually that led to also managing a team of developers that's building the paid products as well. Um, so that's basically how I ended up there. Like you said, somewhat non-traditional, I think, especially because people reach out all the time asking if there's jobs, but like it's a very lean team because DeFi is all bootstrapped. So like the team is probably much smaller than people even think.
Hmm. Yeah, I think the work ethic that is observable from the external is very exceptional for DeFiLlama. Like I know it from the DeFi dojo in the chats, when like we ping 0x not gonna make it, or anybody else from the team, where it's like, oh, for this metric, would it be possible to maybe integrate this or that? And like 45 minutes later, they respond, oh yeah, we integrated that just right now. It's like product shipping on demand. It's pretty fascinating. And yeah, I think DeFiLlama already before the launch of Llama AI has been kind of one of the most credible, neutral, and like widely used analytics platforms in DeFi right now, at least when it came to surface level DeFi data and just making the stuff that is observable on chain more accessible. So could you explain a little bit how the idea of Llama AI came to be, maybe also in relation to other on-chain analytics platforms that have been using AI for some time? I think Arcam has some AI features. Nansen has it as well. So how does AI and Llama AI enable to improve the product suite that DeFiLlama already had available?
Yeah, good question. So I guess taking a step back and starting from first principles on this and all of our other like premium products we've launched recently, the main site is still free. So that's what some people don't know, because it's like, oh, DeFiLlama's going paid. No, the main site is still free. These additional products are basically built to let people access the data in new ways. And so how does Llama AI come into that? Basically, the idea behind Llama AI, and it's evolved a bit, but like still sort of the main thing that it's great for, is if you want to get some cut or chart of DeFiLlama data that's not immediately available on the site. With Llama AI, you can do that. So, for example, if you wanted it to calculate the protocols with the most stable revenue streams, like you can imagine how that would be useful, because oftentimes revenue might go up a lot for a week and then crash down, and that's not really a good signal. But you might ask for like protocols with stable revenue streams, or you might ask for protocols with stable revenue streams that have increased in four successive months, that also have growing TVL, right? Like that's suddenly turning into something that would be a lot of work on your own and might require you to pull CSVs and do calculations. The idea behind Llama AI is basically that what it will do is it will write a SQL query. Like that's what's happening under the hood. It'll write a SQL query to pull those metrics for you, calculate them, and then generate charts and tables based on what you're looking for.
Yeah, I think one thing that has been lacking for on-chain metrics in the past is to derive like correlations between different metrics or just put them into context. Because I think with public chains where you can, in theory, access a ton of data, like try to explain a bunch of dynamics happening on chain with that, it comes with the risk of just creating a ton of noise because there's so much data available, but giving through very little signal. And I think with Llama AI enabling kind of putting data into relation with each other and like different metrics, I think that like drastically increases the signal to noise ratio. So how does Llama AI sort of work under the hood? How does it source the data? Does it only source it from what is available on DeFiLlama? And like, feel free to share your screen to walk us through.
Yeah, totally. I'll share in a sec. And before I get into that, I wanted to expand. It all ties together, but I wanted to expand a bit on what it's not before getting into how it works. So, like, what it's not, and I think this is where some people misunderstand, is they think you show it a chart, like you show it the TVL chart of something, and then you ask, okay, like analyze this. And I saw someone posting something. It was like, oh, like I can already do this with ChatGPT. I can post the chart in, and it will tell me like if it's going, it's like it's going up, it went down. Like you don't need an AI to tell you if things going up or down. You can look at it and see very clearly. So what it isn't is for analyzing something like that, like a single chart. What it is for is basically for creating custom cuts of the data for deeper analysis, for like examining second order effects, or for performing calculations that like wouldn't be immediately on the site. Right now, it's all DeFiLlama data. Well, actually, that's not true. Right now, it's almost entirely DeFiLlama data. It incorporates some other sources like uh, prices, for example. It has access to, although we have our own price API, so you could argue that's from us as well. But we're in the process of adding other things like news, governance, social media output, all of those sorts of things. So it will have access to more, but originally, as it's conceived, was basically a better way to access our data. And I can go ahead and pull it up now, and to explain how it works, I'll do like a sample prompt here. So for example, I might say, pull the protocols with most stable revenue, filter to revenue over, let's say 1 million per month. Now let's go a little bit more degen. Actually, we'll say 100K per month. So basically, what it's going to do under the hood is, like, it's got these fun things, wrangling revenue stability. What it's going to do under the hood is it's going to write a SQL query against our database to pull this information. And then hopefully it should just take a few seconds. What it's going to do is it should pull up a table with these things. The table should include links to all of the protocols. And then depending on the prompt, it may or may not also create a chart. And one thing that's also really useful about it is, I'll show you in a second, is that you can do this in one single workflow. So here, for example, you can see it generate a chart. No surprise, like stablecoins have the most stable revenue. You see some other things like a few liquid staking platforms also make sense. Those would have stable revenue. I'm actually somewhat surprised to see like, for example, Axie Infinity and Lighter are that stable, but like, there you go.
Surprising
Right?
that it was still around.
Yeah, exactly right. But then if you wanted to like double check it, you could click into there. It has some analysis here. I think the most like useful thing is the actual things it pulls out. But so what you could do, for example, and I think another great benefit of it is, I don't want to go like too salesy, but I do think this is actually like a very useful tool for an analyst. Is that normally if you saw these things, you then might have to like click through the site or go to a few different pages. You can just like stay in the same chat and then ask it questions and like ask it to pull in more things. So you might say, for example, like filter to protocols with a tradable token, right? Because like Tether and Circle, well, Circle is a public company, but like Tether having stable revenue isn't that useful to us. Filter protocols with a tradable token, chart the revenue of the top 10 in a stacked bar. So then basically, like, you can stay in the same workflow and then like ask it to make additional changes, ask it to build charts, all those kinds of things.
So is
Yeah.
Llama AI a custom built LLM, or is it essentially just a wrapper of any of the models out there, and trained additionally with some of the data that's available on DeFiLlama?
So it's not its own LLM. It uses one of the leading models. I wouldn't say it's just a wrapper though, because there's a lot of additional plugins, or a lot of additional things under the hood that go into, for example, like letting it pull structured data,
Yeah.
and then pull this way, and then now we're incorporating vector databases to like bring in other information as well, like white papers, governance, all those types of things to add additional context to it. But you can see here it generated the chart, and like the chart is actually interactive. So again, like there's a lot of things, like you have the back end part going, and then you have the way that ties into the front end. One thing that's actually, I'll say, is that this required basically rebuilding our entire database, because the way it was originally set up was not in a way that was friendly for the LLM to write queries for. So basically, it required rebuilding the whole thing in a way that it could consistently write queries for. Because originally we thought that it would be like, would get one of these off the shelf products that say like, you can plug this into your database and then people can talk to your data. Like, legitimately, none of those worked that we tried. None of them worked. So it required rebuilding the database and then and then coming up with like our own custom solution.
Just to dive a little deeper into the architecture of it without having to get too technical. So, is it kind of built on top of a public block explorer like Etherscan and like the other ones respectively for Hyperliquid, Solana, etc.? Or do you guys source the data right from the chain and then also process it entirely beginning to end within your own database?
Yeah, so Llama AI would be sourcing it from our database. Our database would be sourcing it from a variety of places. Oftentimes, we pull things directly from the chain by running our own RPCs. There are certain things that would come from other APIs, if depending on like the technical requirements. I think we track around 400 chains at this point. So in some cases, it does depend on like whether you even can run your own RPC or that sort of thing.
I think in the past, whenever I ran DeFi related questions through Grok or Gemini, ChatGPT, or you have it, I think there were like three major flaws. I think the first one was in the presentation of the data. It wasn't really able to present them in a structured format. It was usually like a report like structure, which if it is a qualitative question is appropriate, and like some of these reports were pretty good, but to really make the data accessible and easy to verify for you without having to manually search to double check it with some of the on-chain platforms, I think that was quite tiresome over the past months so far. I think also the selection of sources was sometimes quite weird. Like even though I asked it explicitly to primarily rely on crypto Twitter and like crypto native sources, sometimes when I asked it more generic questions about DeFi, it often started talking about like XRP and Cardano DeFi, where I was wondering like, where is that bubble even alive? Like in what part of crypto Twitter do people consider that like a relevant chain or a relevant ecosystem? Like the fundamentals just don't match it. And I think the third major flaw was just it when you went too deep and didn't like you wanted to get very deep into an individual question, but you didn't inherently restrict it in the answer that you wanted to get out. It often started hallucinating. So I guess you were also able to fix that a bit with Llama AI, because so far, like when I've seen it being used, it always put out like quantitatively correct metrics. So I think that's quite a big improvement. I would say that many people using AI in crypto would prefer like a capability of the AI that it has less features and like less produces less insights, but the insights that it does produce have a much higher likelihood of being correct. I mean, especially when it comes to correlating fundamental metrics to price, etc., where you want to depart from just analyzing what is happening on chain, but also connecting it to, okay, how do I monetize this? How do I turn that into a financial bet? I think that's the option that most people would prefer, but like curious to hear your thoughts on that.
Yeah, totally. So where to start? Yes, those issues have been almost entirely. I'm hesitant to say entirely because then someone's going to come up with some some example. But like as far as I know, basically solved. And the reason is the way that it works is that it's not. Is first off, it's real time data. So like the reason why a lot of the other LLMs like Grok or ChatGPT or anything, if you ask it questions about DeFi, is why it often comes up with answers that seem like 2021 coded. Is you can imagine that it's trained on like a corpus of text going back a decade or more. And so maybe from its perspective, I mean, I say perspective as if it's like a living thing, but from, we'll say from its perspective, like, oh yeah, they asked about like blockchains and smart contracts. It's very relevant for me to like mention like Cardano as one of the leading ones when in reality, like maybe fewer people are talking about that today than they were a couple of years ago. And I'm probably going to get flame for this. I'm sorry to any Cardano people who watch this. I'm just using that as like, as an example. There's other, examples as well. Like you could imagine a situation where it would mention like Bitcoin Cash or something that was relevant half a decade ago. This is pulling real-time data, so that's why that's like not an issue, right? It's going to be most cases pulling data based on what's current, unless you tell it to go further back. The other thing that's interesting is that, like I mentioned before, it's actually constructing SQL queries to pull this data based on what you asked for in the prompt. So like this here would have come from a query that's then formatted into a chart. Same with this, it's formatted into a table. I have seen some people post things saying like, oh, it hallucinated this, hallucinated that. In those cases, those were errors, and the developers working on this are addressing them, but they weren't actually hallucinations. In most cases where people are saying it's hallucinating, it's actually structuring the query in a way that like wasn't what they wanted. So for example, like maybe it's including something in TVL that you wanted excluded. So in most cases that people are having issues with it, which I think are the minority, but in most people are having issues, it actually has to do with the data is real. It's just like the wrong query. It's not actually making things up.
So as of now, what would you say are the biggest limitations of Llama AI? Like, what can it not yet produce where you at the Llama team are thinking it should be able to, or wanting it to be able to, and kind of feel free to tease a little bit the roadmap for the remainder of 25 and early 2026?
Yeah, totally. So there's two things that come to mind. So the first is, and this is very high priority, is being able to produce in-depth research reports across a wide variety of metrics. So I think it's not terrible at this now, but for example, if you ask it to make an in-depth research reports comparing this perpdex and this other perpdex, it will probably pull up a couple metrics and show you the metrics for each of them. But what you really want is for it to pull like a wide variety of metrics over an extended period of time, and then conduct some sort of analysis of like which one is leading and why. The second thing, and this is related to that, is bring in more information. So if you were to ask it to conduct a proper analysis of, say, Hyperliquid, ideally you would also want it to have context on recent announcements, on governance proposals, on social sentiment, maybe some context on like technical architecture or other recent technical announcements. So the second area for improvement would be bringing a lot more of that data into it, so that way it doesn't just have access to the metrics, but it can actually put those in the context of like what's happening qualitatively.
Is it already able to connect the change in fundamental metrics to the change in price and like derive a correlation for that? Just to think of a few examples from this year and this last sort of market cycle. I think, for example, Syrup and Pendle are two protocols which have seen quite an impressive amount of growth, but the underlying tokens have only been like at best loosely correlated to their underlying growth story. If you think about the Pendle Ethena flywheel, I think they peaked at like above 10 billion in TVL, if I remember correctly. Like it grew pretty rapidly throughout summer. Yet the Pendle token, I think it peaked in early spring, and didn't really significantly exceed the 2024 all-time highs. And like Syrup has been ranging between like 20 to 60 cents for forever. So is Llama AI already capable of like connecting the change in fundamentals to the change in price? And feel free to maybe run an example query.
Yeah, so I just put an example in when you asked that. Now this is actually a prompt I haven't tried before, so it might require like a few tries to see how it happened, or see how it would work. Let's see. The first one actually. So I guess I'm going to mark this down as like an area that probably could be improved. I think maybe I phrased the original one wrong. I'm going to try doing one more specific, where I say, what's the correlation between fees or revenue and price for Pendle I'll just say for Pendle. We'll keep it simple and then make it more complex from
Yeah.
there.
Because I think like occasionally you see threads on Twitter where people say, okay, at this point in time, if you look at the fundamental metrics of protocol XYZ, it is undervalued relatively to another protocol where the price or like the FTV is much higher relative to their fundamentals. But there's you can make a lot of these arguments for a singular moment in time, but there is very little awareness and insight in the entire DeFi industry of how relevant these fundamentals actually are. Like many people ignore the possibility of a given protocol just for a sustained amount of time trading at a different ratio than another one. And there might be other fundamental reasons or narrative reasons for that, which people are overlooking. So I think um, even if this turns out to be still one of the areas that can be improved for Llama AI, I mean, that at the end of the day would be the end goal of replacing an analyst or associate level researcher in DeFi when it comes to liquid funds and allocators into tokens. Because fundamental theses here and there. I mean, there are a bunch of protocols in DeFi which are genuinely interesting in terms of the product they use. They have impressive growth stories. Some of them are niche, but are like getting heavily used by a loyal user base. But it's just not reflected at all in token price. And then it's I mean, while there are new stock issuances and like equity raises with publicly traded companies as well, and like traditional securities, but in crypto you have to be a little more acutely aware of the supply side of any token. So I think if a model is able to include both the demand side for the product as well as the supply side for the token and how it gets monetized, I think that would sort of be the end all be all to really like produce novel insights and change the way capital gets allocated in the industry in the long run.
100%. And we actually have some other products coming in the near future, such as I'll tease like more granular revenue breakdowns as well as some like gap compliant income statements for protocols to kind of help people do a more proper financial analysis of them. I'm going to show you what it came up with for this, and I think I'm going to mark it down as an area that could be improved because I would have liked to see it, for example, come up with a correlation coefficient, which it didn't. But yeah, it's the first time I've actually tested this prompt. So what it did basically was it pulled up fees, revenue, and price, right, without like calculating the correlation, and did a visual comparison. As a follow-up, I then asked it to calculate the P to F ratio over time, which it did, which is interesting. You can see that that's like, so there's a slight error here where this is, of course, not dollars. The dollar over dollar should cancel out. And then it does seem like actually the P to F has stabilized over the past 4 months or so, which is interesting. One interesting analysis that I would want to run, which I probably could with this, would be to see across other categories or like in general, have P to F ratios stabilized in the industry where you see like things trading closer to fundamentals. And I don't know what the answer is, but that would be interesting thing to watch over time for the maturity of the industry, would be whether there like becomes more rhyme and reason to how things are valued.
Yeah, I think for most people who are participating in the industry, like the economic implications and these granularities have now become much more interesting than like the technical specs or the feature stack. Like once you have a protocol out there, I think within the builder community, there's like a lot of awareness. I mean, since people are dealing with these things day by day, they are sort of forced to understand what they are building with. Whereas on the investor side, I still think there's a lot of very vague bull cases and bear cases out there. Like people are not really able to understand from like the very beginning to the very end, like how different growth metrics actually correlate to revenue. Like, is there a linear connection? Is that just a correlation? Is that a causal relationship? Then do different like product streams or usages of DeFi protocols drive revenue to a different extent. I mean, we see it more and more if you look at Jupiter, if you look at EtherFi, if you look at Hyperliquid, like the vertical expansion of the leading DeFi protocols is increasing more and more. Like nobody wants to be just like a DEX or just a lending protocol. I think Fluid is another great example for that. And it has gotten way more complex to understand which of these product features actually drive a revenue and like what the economic implications of each one are. And I think there's still a ton of mismatch, first of all, between the attention given to individual features of a product, and then also between the product as a whole and the price action that is reflected in the underlying token. And I think that not only can products like Llama AI help the investor side to better understand like what might result in a good or bad investment, I also think that if especially these correlation coefficients, etc., if that all has been improved and if there's like a more granular breakdown, I even think that many of the like protocol teams do not properly understand their economics themselves and what would make people more willing to buy and hold their token. I think that is still very underrated.
Yeah, I think that's a very good point. And I think to the thing you said about technical specs versus revenue, for example, I feel like for a long time, people basically based their investments in crypto on either the narratives or on white papers and things like that. The problem with that, especially with the white paper aspect of it, is that now that you actually have products that have users and in some cases are generating hundreds of millions of dollars in revenue, if your investment thesis is that like this other thing is, has like better tech, like to me, that's just no longer a very good thesis unless you can somehow tie that to how they're going to use that tech to gain market dominance. Because having like incremental better tech in one area doesn't necessarily mean that more people will actually use it. And now that you actually have numbers from people using it, like the market kind of speaks for itself about what's actually a like what's actually the more useful technology. Because like
Yeah.
something else, yeah, like you said, might be, it's like it's sort of like and I have a lot of friends who use Linux, so I'm poking fun at them. But it's like, someone's like, oh, like why would you use like why would you, if someone said like why would you invest in Microsoft or Apple when like Linux is better? And it's like, well, like perhaps it is, especially for like, your use case, speaking to my friends, but that doesn't necessarily mean that they're going to have more users, make more money, or I mean, in Linux, I don't think that, it's not like something you'd invest in, but it doesn't mean that necessarily the other companies won't actually be the ones that make money. And I think that that's what you're seeing with a lot of these crypto protocols is something that pioneered like interesting tech isn't necessarily the one that ends up being the best investment.
Yeah, 100% agree. I think especially during the last cycle, but we still have like some taste of that left in the industry, especially on the media side of crypto, where if you look at a bunch of crypto YouTubers or influencers on crypto Twitter, even those who try to be somewhat rooted in fundamentals and not try to make everything super sensational, the metrics that they rely on for comparing different protocols or different chains are in many cases still very like unsophisticated in the sense of just having this metric available does not produce any actionable insight into whether this product A gets used, B generates revenue, and C it often like neglects the supply side of things on like new token issuance, even for like granting economic security through validator rewards or like any other like supply dynamics. And I think that like still leaves a lot of people on the retail side stuck with very imperfect narratives where they think that, okay, because metric XYZ or like some vague partnership has been getting announced on the X profile of the protocol I like, the token must go up. Like we have learned throughout the past 2 years, I would say in particular, that like, for most altcoins, there is no long-lasting bid. And the discrepancy between fundamentals in terms of usage and like actually generating money and actually getting adoption and valuation is there are still huge gaps. If you look at XRP, if you look at Cardano, if you're looking at some of these older L1s and also some of the L2s, there's still a huge discrepancy in their valuation, both on the market cap and FDV side, versus the actual usage. And even if you say, okay, there's at least somewhat of a correlation with price going up while also usage is going up, well, what does the underlying token actually grant you rights to? It is a suggestion token. It doesn't give you any rights to participate in that revenue. It doesn't give you any rights to cash flow. It doesn't give you any merger and acquisition rights. Like, you have zero security like by holding this thing. It is nothing more than a suggestion. And essentially, many of these more fundamentally project associated tokens are just meme coins with extra steps. And I do think that just making metrics more accessible, it will put more pressure on projects to be concerned about introducing some sort of like equity rights or fee switches, which might not like put it into stone and like hard enforceable law that people will be granted X, Y, or Z, but at least make it a little more accessible and align incentives that also projects have a reason to kind of be aligned with their token holders, because we still see a bunch of discrepancies there.
Totally agree. We actually, I know I've teased a few things this time, but we have something interesting that should be launching soon related to that as well as like related to token holder rights, token versus equity. Because that's like probably the biggest scam, right? Is when protocols, they launch a token and then they raise money for equity as well. And there are times where like the token holder wins out, but like most cases where there's also equity that I've seen, you know how usually it goes like debt holders get first priority when the company pays out, and then like equity holders are like second. Like somehow crypto has invented a third thing that sits below equity in the totem pole, where it's like debt gets paid out, equity gets paid out, token holders get nothing, which is extremely unfair. I mean, it's makes it a bad investment if you end up in that situation. It's also, I would argue, like highly unethical if people have invested like expecting, under the implication that there's some sort of value that will accrue to the token eventually. But we're launching some things like that, and I think it starts with having transparent metrics for what the revenue is and how much of that revenue is going back to token holders, and then you can also get into more qualitative things like um, like what discussions there have been around a fee switch in the past, whether the fee switch could be turned on, what the governance architecture looks like, that sort of thing.
100% agree. I also think that like one vertical that hasn't been explored that much is activist investing in DeFi, and I think that is going to take hold once there's a more streamlined alignment between like token holders and equity rights. And yeah, I think that's going to become very interesting. Like maybe even some of these DATs could make themselves more useful in acting as sort of an activist investor. But yeah, I think that's future talk. But maybe to come back to Llama AI. So has it like significantly increased the signups for Llama Pro, and how does it tie into your existing product suite, and like what are people mostly looking for on the Llama AI side right now?
Yes, yeah. So it has significantly increased signups. The most popular things we have for our paid product suite would be Llama AI. We have a custom dashboard builder. We also have a feature for downloading CSVs and also images, which is good because, for example, you can customize how many of the charts look now, download an image, and then put that directly into a report if you're an analyst. So that was like we basically designed that after hearing from people that they wanted it to be like easier to generate charts for internal reports. So those have been the most popular things. We also rolled out spreadsheet functions recently. Basically, the thing tying all of this together is that these are ways to access the DeFiLlama data, but in new formats. So like the data, you could view it on the site, but if you want to build a custom dashboard with it, we have that's part of our pro product. If you want to do the sorts of custom queries we had talked about earlier, you use Llama AI. And all this is like wrapped into one plan. So the way we decided to structure it was rather than having all these different products, we have like our one pro product, and then we're just continuously, like oftentimes, you know, monthly or even like several times a month, we're adding new things that go into the pro product. So it just becomes more and more valuable. The eventual goal is that it's like, if you're in DeFi, and especially if you're a DeFi analyst, there's so many valuable things tied up in DeFiLlama Pro that it would be like a no-brainer to buy it.
Yeah. So, do you have any insight into what people are mostly using Llama AI so far? Like, what type of queries they're running?
Yes, yeah, actually. So it it comes there's a categorization of like a few of them that people are using it for. The first would be um, our guy who like worked on it actually like did like a detailed analysis of this, so I'm trying to like remember it from memory now. But the first would be like generating custom charts. So that would be like the most clear cut one, right? Like you want a chart that's not available on the website. You just describe what it is, and we'll generate it for you. The second would be for discovery. So, for example, if you wanted to find a protocol that has growing TVL, growing revenue, is above a certain size, has an investable token, like, go down the line. That would actually require you to jump around to like a number of different pages and things like that. Whereas with Llama AI, you can ask it to pull that, and then it will bring it up with a link for you, and then you can ask follow-up questions to like view charts related to it. So that would be a common one. Comparing protocols is also a common request. Um, Looking for, I mean, there's many different things you can use it for, but like something else that it's very useful for is identifying like larger trends and then narrowing down. So if you wanted to know like which categories, for example, protocols are earning the most revenue in, you could use it for that. Or if you wanted to know which categories like in aggregate have growing revenue, that would be something you could use it for. The data is all there, but like to actually get it in that slice where you see like how much revenue the protocols in each category are earning, and how that's changing over time. Llama AI would be ideal for something like that.
Do you have any personal favorite prompts that you're using a lot? And like, how has the launch of Llama AI changed your personal edge in DeFi and like also your like investing and farming behavior?
Yeah, so the biggest thing that I'm using it for is well, I will say the things I said people are using it for, I'm kind of most of those are things that I'm using it for. Um, One would be to find trends. So rather than having to like use whatever heuristics I already had, or like looking at Twitter to know where to look, Llama AI makes it much easier to actually get quantitative data on like which categories are either performing well in price, or are seeing like increased market share in terms of revenue or deposits. Deposits being TVL in this case. So that would be the first thing, like to identify those trends, which is good for making content, good for investing, sourcing, trade ideas, all of that. And then the second thing would be for those types of like more detailed inquiries or deep dives, where you narrow it down to a few products or one product, and you're just asking for like increasingly detailed information about the metrics behind it.
So, what are you mostly trying to get out of it yourself? Like, are you more of a directional investor, or are you stablecoin farmer, airdrop hunter, or like how do you turn the analysis that Llama AI enables into like actual investment decisions?
So I've changed a lot over the years, and there was probably a time a couple years ago where I was farming a lot of airdrops. There's times where I was doing a lot of DeFi farming. At the moment, partially just because my time is much more limited now, I'm mostly focused on finding like a small handful of projects with elite fundamentals, and then holding those on like a longer time frame. I think over the years, when I look back at which crypto trades were most successful, and there's always some where it's like you see something trending and you like ape in, and then it doubles or triples, like or 10x's. If you've been around for like a few years, you like always have some stories like that, um, or sometimes more than 10x's. Yes, there's always stories like that if you've been around for a few years. But like when I actually look back at like which things I made the most money from, it was always something that had solid fundamentals that I was willing to hold through dips that I held for like at least 6 to 12 months, if not longer. So that's kind of like the 80-20 is now I'm focused only on those types of investments rather than on like trading the flavor of the week.
So how do you view the markets right now? I think that you're one of the few people in the space who are like still, you need to have some fundamental optimism to work in this industry, but you're not one of those who are trying to hide or deny the occasional absurdism and like financial nihilism that we see in crypto and DeFi a lot. So how do you think the industry has evolved over the past years? Like also from your perspective as a content creator, where you have like much higher level insights into things, and what do you think the state of the market is right now?
All right, we'll do state of the market and then state of creating content in it. So as far as the market goes, I feel like it's kind of bifurcated. I was actually talking about this with a friend earlier today, where you have like on the one hand, it has gone max degen in some respect, where you have like this rise of coins that aren't claiming to have any sort of utility. They're not claiming that they're going to be used for cross-border payments or digital identity or anything. Eventually, they just like solely exist as a trade. And you have like the rise of that, like meme coins, as they're often called, but there's others in that category as well. And then on the other hand, you have the rise of like institutional products, and also not even institutional, but like products with real use and real revenue, where you don't need a narrative, right? You don't need like a community. I think the whole idea of like a community in crypto is kind of absurd in many cases anyways. Like I'm not talking about like an investment community, but just quick tangent. Like if a token says they have a community, like what does that mean? Like you have investors, you have users. If someone is not an investor or a user, like, but they're somehow still posting in your like Discord, I would say they're probably like a net negative in most cases, because that means
But
like
Patrick, what about the $100,000 airdrops for like sending GM into the Discord every morning? Like, you got to respect the hustle.
exactly right. I mean, and and there's people who, if someone's saying like, oh, but like I'm part of the community, I post about this. In most cases, it's because they're an investor, right? So they fall into one of those categories. But like, so it's like you have investors and users. It's not some new thing. But tangent done. Like you have these actual products that have real revenue. Like Hyperliquid is probably the most well-known example at this point. But you also have something that, well, there's no token at least yet, but something like Polymarket, which is like incredible amounts of usage, incredible mind share, where it's broken out into the mainstream. It's referenced in news like probably daily at this point, probably many times a day, actually, almost a household name. Stable coins, of course, are also going very mainstream with regulatory clarity in the US and like breakout market cap growth. So you have like this other sort of, on the other side of meme coins, you have like these protocols that actually have real fundamentals now. I think the problem is, and this gets back to like, this is going to get back to like the challenge with creating content right now, is that with this change where you have like some that are just complete financial nihilism, some that have good fundamentals, I actually think that's like you have a huge decrease in the amount of people that are buying altcoins, like to speculate on incredible gains in the future. You like always have had this like very high premium on many altcoins that's like way in excess of fundamentals, because people like are hoping to basically like hit a lottery ticket in the future. Now that there's like, like on the one hand, people either try to hit that with memes, or on the other hand, like they're investing based on fundamentals and usage. A lot of those things that are caught in the middle, like you've seen that speculative premium has been drastically compressed. And this is my theory on why so many altcoins have like performed very poorly over the past year, even though Bitcoin has gone up and like we've had so much positive news, is because their valuation before was maybe like 90% speculation. And there's just not as many people that want to speculate in those things. Similarly, if you look at like Google searches for crypto, for example, like it's approaching like 3 or 4 year lows at this point, despite the fact that you have all these positive developments. So my theory on what's going on there is that like there's people using it, like there's companies with good fundamentals you can invest in, but there's like actually less interest in speculating on it than there once was. Maybe that'll change in the future. It would be great for me personally if it does. So like I certainly hope it does, but I'm not banking on it. The challenge with creating content that I found, and actually I have not come up with a solution for this yet, is I don't know about like you and this podcast and DeFi Dojo and all of that, but like the thing I've run into is like it does feel like there's like legitimately far fewer people interested in DeFi and crypto than there once were, and so I often wonder whether it's like even worth making content anymore about this, because it feels like it's turned into a bit of a back end technology. I still am, because I work in the industry, and on some level I enjoy it. Before we started this, before we started recording, we were talking about like a tweet I did over the summer, which started some heated discussion where I said that like I considered it like one of the biggest waste of time of the past few years, that I built a Twitter account to over 90,000 followers. And I actually still think that's mostly true. I mean, it led to having this opportunity at DeFiLlama. It's led to many other interesting things that I've done over the years. But like, the fact of the matter is, like, I do think actually this is partially because of like Twitter's algorithm changing, but like crypto Twitter is like a shadow of what it once was in terms of engagement, in terms of the number of people on it, in terms of like the ability to like get engagement via posting about crypto. And so yeah, I do kind of regret the time that I went into making an audience, because I never really like did a lot. I never really did like promotions or like cashed in any meaningful way. So now that it's like now that like there's not as many people interested in it, it does kind of feel like it was a waste of time, if I'm being honest.
I think, I mean, there are tons of points that I'm resonating with a lot. Maybe to start out with a few comments on the whole like declining interest in altcoins, and corresponding with that also the declining interest in DeFi coins. I think there are like two variables coming from the investor base, and like one major variable coming from our industry itself. I think the investor base variables are like, if you want to speculate on something that has a lot of hype, but also where you can craft a like fundamental or like society changing narrative around it, then AI has completely taken the spotlight ever since the launch of ChatGPT. And the sort of bad reputation of AI and the stuff going on in the industry is nowhere near as bad as the reputation of crypto has become ever since the collapse of Luna and FTX. I mean, for us in the industry who are on here like 24/7, that's like decades in the past. But I think for the normie investor, many of them have not forgotten about it yet, even though most of them were not affected. It's like when I talk, I mean, my friend circle is mostly in like investment banking, asset management consulting. So like typical like economics, finance, business students, and like the finance bros. And they, especially after the last bull market peaked in late 2021, for many of them, crypto just faded into some sort of like distant asset class that is around, but nobody was able to make sense of it anymore, because like all the available attention for envisioning like a grand new shift in society, that all went over to AI. So I think that is one factor. I think the other factor from the investor side is that I don't think that financial absurdism and financial nihilism has decreased ever since the theory has been made public. I think it was Travis Kling and Good Alexander who have been talking about this a lot. Like these two are like one of my two favorite like people to follow and read on Twitter, because I resonate a lot with their like high level and like this top down analysis of things and macroeconomic trends. And I'm at heart I'm still somewhat of a like macro doomer. I'm not a crash believer at all, but I do think that like there's like if you look into the abyss of the abyss of the economy stares back at you, and it definitely affects you. Like, there's no way to deny that. Zero possibility. And I think if you look at all these trends that fuel financial nihilism, the inability of young people to buy houses, you look at all of these meaning crises, loneliness crises, and I mean, I'm 24, so I fit perfectly into that generation, and like I see
You're only
it around.
24?
Yeah, I'm only
Oh
24.
wow. Good
And I
for
mean,
you.
I'm living in Berlin, in Germany, which is like one of the capitals of like societal degeneration and like all of this absurdist behavior. So like I see it in front of my eyes every day, and I only think that has been increasing over the past years, and I don't see that heavy ship being able to be turned around. I mean, politically, there's, regardless which like side of the aisle is in power, there is no incentive to be like fiscally conservative and to start saving money. It's always in your interest to just like hand out some free cash to the voters. And I think that even if you have the noble intention of like turning it around, we have come to a point where there is no possibility to do that in a smooth manner without like creating a huge cohort of like economic losers who have been winners for the decades before. And then you have all the demographic variables, especially in the West, where elections are primarily dominated by the older population. And I mean, they don't have any incentive to like give away all their wealth. So like this macro trend of financial absurdism, I think it is growing and it's going to continue to grow. But if you take that and say, okay, like there's no point in engaging in a 9 to 5 corporate career or whatever, and I just want to gamble, then people at least want to gamble something that they have an emotional connection to. So that has all come down to either just going to the casino itself, because that is fun. You can like go get drunk with your friends while doing it, or you do sports betting because you have some emotional attachment to the team. But crypto, I mean, especially meme coins, it turned into this euthanasia roller coaster meme so quickly because the speed of like extraction maxing in this industry was so immense. Like when it started out in spring summer 2024, I still remember like the Geo Bowden meme. I found that so hilarious. Like that was the first meme coin that I ever bought, which I genuinely thought was funny. But like with Pump.fun, which are like, it is useful infrastructure for the market and like one of the most successful apps in crypto history, like it just enabled such a quick dilution. And then you had all of these extraction scandals with like the Melania token, Libra token, etc. I think for the average normie, you have more friction to get onboarded into crypto. You can't just buy the next 2 million market cap meme coin on Binance or your Coinbase account. And the odds, as it seems, to make money with that are even lower than with like sports gambling or just going to the casino, because everybody is aware of like a casino having an edge, or like the house in general having an edge. But that edge, usually if it's like some sort of a regulated industry, is first of all limited, and there is no lies about that edge existing. Like everybody knows the house has an edge. With meme coins, there's that promise of a community, which you were just talking about. What, like as soon as the token is going down, like there is no community. There's only like investors who don't have investor rights if you compare to equity. So I think like yeah, I definitely agree on like these trends making crypto as a whole more unattractive to retail. I think
Yeah.
then on the yeah.
Oh, go ahead. Sorry, I thought you were done.
No, I think on the DeFi side, the main reason why less people are interested is just, I mean, the industry has matured. The games have become a little more sophisticated. You have like all of this like these French DeFi farmers who are like accusing each other of like crime and whatever, like all the time on CT, um, which are like in the top 0.1 and 0.001%. And it just has become much more of a zero sum game because now you actually have to be skilled at it, and it's not sufficient anymore to just ape your Avalanche into, I think it was Ohm starting out on Avalanche, but like there was one of these Ohm forks on AVAX back then where like all of
Wonderland.
my normie friends, they just put $100 in, like, and they felt like the king of the world for 2 weeks before it collapsed. So I think that a lot of the hype has just been extracted out of the industry, and there are genuinely useful products, but like even in my like DeFi farmer circles, everybody who likes the product usually does not like the token. Everybody who's farming something, even though they really like the project, like it's generally useful, it's good technology, it works, the UX is fine, the UI is fine, the token is usually down only, and there's a strong incentive to just sell these airdrops that you're receiving on day one. And I don't see a very clear path forward to fixing this. Of course, like introducing token holder rights could be a very significant step in like finding a solution, but I don't know if it's going to fundamentally change the game for forever.
Yeah, so I've a lot of thoughts on that. I wrote a Substack post recently where I talked about what I'm calling like the altcoin cataclysm. That actually shared a lot of like it agreed with a lot of the perspectives you said, and I think there's a few things that have changed over the past couple of years that have made it much more difficult for altcoins to gain traction. One is sports betting, like you mentioned, and when I brought this up before, actually, I think I brought it up a couple of years ago, and a lot of people were saying like, "Oh, like you can't compare the amount of money in betting to the amount of money in the market." Uh, but the thing is, like, even if the nominal market cap of crypto is what, like $3 trillion, the actual amount of money in the system, I think, is much lower. Like, many of my friends who are in TradFi always say this if they also do crypto. Like, they say it doesn't feel like a $3 trillion market. The amount of money that it takes to move prices is actually relatively low. So I think that like even moving like a modest, maybe even significant amount of flows that would have gone into crypto, into betting, or even prediction markets nowadays, I think that that's like had a major impact on the ability for these tokens to spike. I also think that you've had a lot of other tech verticals have done extremely well. AI being like the most obvious example, where someone could have bought Nvidia, which is one of, if not the largest company in the world, and they would have outperformed like almost any altcoin over the past couple of years. So then, like a rational outsider looking at crypto would say, why would I waste my time trying to figure out which altcoin to buy when I have a better chance of succeeding by buying a company that is literally worth trillions of dollars already?
You could have just bought the actual S&P instead of having to like gamble on Murad's SPX, and you would have been
Exactly. And if you did want to gamble, then there's a lot of AI related companies that have done well. There's been many biotech companies, battery related companies that have done extremely well. Quantum computing, which is like arguably as or more speculative than crypto. I mean, they've had some breakthroughs, but like it's still highly speculative. Those companies have done extraordinarily well, though. So someone looking at it from the outside would say, okay, like maybe crypto's hype cycle has passed. It's in the adoption phase, but like if someone is looking to get those like multi-bagger, very quick exponential gains, there's other places they can look now. And it doesn't take that many people choosing to go those other places to really diminish the extent to which crypto can replicate the sort of returns we've seen in past cycles. And I think that's part of the reason why, there was no like quote like alt season like we've had in the past. I mean, there was kind of one a year ago, but like not to the extent that we've seen it in the past. And I think a lot of that is just that there's many other options for people to speculate now. And then you also have, as part of this, you have pumped up fund and other launch pads commoditizing the launch of tokens. So rather than liquidity getting diverted into like a couple hundred tokens that are like tradable on major exchanges, it gets spread across honestly like millions of tokens that are out there. So then you don't have any one single small group of tokens that does extraordinarily well, and then like you interrupt that flywheel that would normally attract new people to the industry. So yeah, it's kind of it's changing. I've been kind of formulating a comparison in my head that the altcoin market as it existed from say 2017 to 2022 was perhaps like drop shipping, where now it was probably bigger than drop shipping, but like drop shipping was a huge trend like 2015 to 2019. It still exists, but like much less big than it was. And if you were into drop shipping at the time, you could have argued like, well, people are always going to use retails. Like, why would retail go away? And you would have actually even been right that retail was going to move online because e-commerce has like only grown since then. What you would have been wrong about, speaking about people who would have argued that drop shipping was going to be around forever or in the form that it was that forever you'd be able to be like a middleman and make huge sums of money without providing any value. And I think that that's kind of where crypto was, where you could basically be a middleman between capital flows and the on-chain world without providing any real value, and you would make life-changing money. That, in my opinion, is no longer the case. You actually need to either provide value or you need to find a product that's providing value, because the era of just like getting free money every 4 years is over.
Yeah, especially if you're, I mean, on crypto Twitter, we have a very high concentration of people who are disproportionately involved in the industry, but are not simultaneously building something. So, like this entire, it's similar to the people who sold dropshipping courses, or like now the people who are selling kind of alpha groups in crypto. I think there are a few industry verticals left where this makes sense and where like you have enough going on and like sophisticated enough mechanisms going on. And I think like DeFi is one of these remaining few where there is like a positive expected value of like being in constant like exchange with other people who are also in the industry. But if it's you're just using crypto as like or blockchain as a back-end infrastructure, which for most of the use cases, if you plot it against like actual usage, it probably will come down to like there's very little incentive to like be a crypto first or like a blockchain first person. Like you see very little. I mean, if you're working in some big corporates, it's not like you're their Windows guy. Like you have like one IT dude in there who's handling the IT, but it's not like everybody who's working at a company is simultaneously, oh yeah, I'm a laptop person. Like no, it's just like a tool you use. And I think like I personally would find it very sad, but I definitely say that there is a risk of the DeFi native and like crypto native industry and like all of these games that we have been playing with each other for the past, let's say, 4 to 5 years, slowly disappearing or at least not growing as fast as the rest of the industry would. Like there is a possible outcome of Uniswap, Aave, and like all of these fundamental DeFi primitives not really getting integrated into traditional finance and fintech applications, but them just like forking it or introducing building these primitives themselves, or they might introduce them into their products, but essentially the entire brand of a DeFi native product right now is disappearing slowly into the backend, and there's less people. I mean, it's kind of we are actually getting what we've been wishing for in 2021 and 2022. Like when everybody was talking about, oh well, if we really see mass adoption, crypto will be more of a backend thing. It is like more of an infrastructure thing, and like more and more people will go on chain, and like all of these fintechs are going to integrate Aave, Uniswap, etc. And now we are seeing that increasingly, but now we are just left. Okay, basically the things that we've hoped for, they all came true. I mean, if you looked at the announcements that like Zero Edge and like all of these like news accounts, Bloomberg, etc., have been making this year, there have been like, a few dozen announcements that we could not have dreamed of in 2021 and 2022. All these macro regulatory government headwinds that we've been so concerned about back then, many of them have been reduced or completely disappeared. And now it is up to us as an industry to make it count and make it work. And like while there are useful products and like useful financial and economic primitives, we now have to get to a stage where the assets you're able to trade on these things, like borrow against, they have to be interesting too. I think the Cosmos ecosystem is a great example because you had a bunch of like well working products in DeFi and in like DeFi infrastructure in that ecosystem, but nobody was able to offer a single interesting asset to trade on there. You had a like Pendle equivalent over there, you have Osmosis over there, and like these are like really well working products. I think like this ecosystem as a whole has been getting way too much hate, but there's just not a single interesting asset I want to trade over there. So consequently, nobody's going to use it.
Yeah, there was an
Oh
interesting
yeah.
asset on there that that are interesting to many people. There was a period where I had like a significant portion of my net worth on osmosis in early 2022. But
Easier
yeah,
time.
easier times. Yeah, I think is a tangent, but like my opinion is that like probably and maybe someone will find a way to turn it around, but like I think the fate of that ecosystem was probably like mostly sealed after in retrospect after Terra collapsed.
Yeah.
Because like so many pairs on osmosis, for example, were paired with UST, and I think it was a huge uphill battle to come back from that, because like you said, like a lot of the products are working great, and there's many good ones that have launched, great ones that have launched even since then. Um, I've actually used it since then. I mean, I still use Cosmos ecosystem sometimes, but I think it's a massive uphill battle um, to come back from what happened there. Which, to your point, though, like you ultimately need some interesting assets. I think what we're seeing happen is basically DeFi and crypto in fintech are coming closer together, where you see uh, crypto companies, like the successful ones, at least operating more like fintechs, and you're seeing like a lot of other fintech companies start to integrate and talk about crypto more as they see like the advantages of it and the ways to make money from it. Like you see Klarna, for example, launching their own stablecoin. Stripe is doing a lot of things with stablecoins. There was this company that started out as a way, I think, for like it was like payments for sneaker sellers, and they branched out to a few other things, but like they incorporated stablecoins heavily on the back end, and they're scaling massively fast right now. So I think that's what we're seeing. The good news is crypto is becoming an essential part of fintech. Bad news is fintech is kind of boring to most people. Um, and I think that's why the industry finds itself in a weird place right now.
Yeah. I mean, there are fintech assets like Robinhood, which are appealing to retail, but okay, you buy your Robinhood shares, and then you maybe like look into your Robinhood investor Facebook group once a month, but like there's not enough substance for this to be talked about 24/7, like in your Telegrams, Discord, and there's not like a 10,000 individual large and active Twitter bubble of like Robinhood investors. So I think I
Exactly.
overall
Yeah.
very much agree there.
No,
And
that's I did something. I got a lot. I did wrote this last December, and actually I got a lot of hate for it. Was I said that I predicted that crypto would never reach the hype of 2021 again, or at least not in the foreseeable future, but that like many more people would use it. And like a great example is something like Nvidia. Like you mentioned Robinhood, but like Nvidia, it went to how many trillions of dollars of market cap?
I think
And there's
4
there
trillion.
yeah, like 4 trillion, and it's not like you've got like Nvidia Twitter where you have like
Yeah.
people posting all day about how they're like in the Nvidia community, and like there are people who talk about investing in it, but it's not like you have like, like people with, there probably is someone with this name, but like you don't have 100 Twitter accounts with like named like the Wolf of Nvidia, who like, entire personality is based around investing in Nvidia. It does well because it's like one of the most important companies in the fastest growing industry in the world.
Mm. Yeah, and Nvidia is like 4.4 trillion right now. It's larger than the entire GDP of Germany, I think, or
Wow.
around uh, that similar size. No, but I agree. I also like think the whole convergence of like fintech neobanks, crypto neobanks, DeFi protocols trying to become neobanks. I think like that is a very interesting development, and like that is some genuine value and like utility being created, because now that finally enables users to like utilize blockchain infrastructure, like their DeFi farms and their yield opportunities to like fuel their everyday spending. I think like Ifina is involved in quite a few of them with like USDE, where you can create like a yield bearing base asset that you can spend against. Like EtherFi, I think, has been very successful with their credit card. You see Mantle with UR. You have Plasma with, I think, the Plasma One neobank. I mean, also all of these stable chains that have been announced back over the summer and spring with like Plasma stable. There's another like a Circle one. I like even I lost track of all of them because there have been so many. And I do think we are running the risk of like copying the Alt L1 and like L2 playbook of the past years, where it's going to be very hard for these to differentiate between each other. For example, like even for Plasma, I think they had like exceptional backers. There was a lot of positive mindshare around them post launch. And I mean, the chain has been working very well. There have been like good like products to use, like deployments of all our DeFi favorites over there. But it's just very hard to keep like TVL loyal and sticky. I mean, as long as it's not incentivized, there's no reason to stay over there. And there's just a very predatory fluctuation of capital over to the next thing, to farm it, to dump it, and then move on. And I think it's an unsolved question how to fix this and like to make economics in DeFi approach what we could call sustainability.
Yeah, no, I think that's true. I do think the I probably sound like a broken record here, but the challenge that a lot of product teams are finding themselves in right now is that most of the crypto industry was basically built around people trading crypto. And so even if you have like many some of those teams that made that pivot to back end technology early, like are doing extraordinarily well. Like we've had several massive acquisitions already this year from other fintechs or TradFi that's like getting into the crypto world. I mean, a prominent example I think was Stripe acquiring Bridge for $1.1 billion. Like that's a great example of a team that saw where the world was going and was able to profit massively from that. The challenge with a lot of these other projects is maybe they were like a bit derivative or a fork in the first place, or they just built something that was new but it was geared around crypto traders. And in some cases the total addressable market for that might be like, if you're looking at like crypto traders that are already onboarded to a specific ecosystem, maybe it's like a few thousand people, and that's like probably too small to build a large business on.
I think in the stablecoin space, like M0 sort of on the infra side and Cap Money on the like deployment side, I think these are two interesting ones to watch. I think they've been like getting a reasonable amount of attention, but I mean, mostly from high quality people. And I do think that there's genuine utility in what they've been building. I mean, we could go on for like several more hours here, I think, but like I don't want to steal too much of your time. But maybe let's finish off by your outlook on how crypto media is going to evolve. I mean, that's something where I think we have a lot of similar views on like the state of the industries and also like the issues that we have internally in DeFi and in crypto at large. So like considering all of that, how do you also like view your future as a content creator, and how do you think that crypto content and media will develop?
$1 million question. Honestly, it's something that I'm like taking a step back and figuring out myself right now. I wish I had a better answer, but like if I had a better answer, then probably you would I would be I'm still my content, my audience is growing, but I'd be growing much faster if I had a good answer to this. No, it's really tough right now because like for example, I've always made a lot of tutorials about how to like do research on protocols or how to use on-chain products. And like despite the fact that the industry in many ways has done well, like that particular audience seems to have declined over the years. I honestly like do not know. I've thought about completely or heavily pivoting my content like many times, but I'm still trying to figure it out, I'll say. So I wish I had a better answer, but like I don't know. I don't know if there's going to be an audience for crypto content long term. I hope there is, because I've invested like however many years in building that now. In the event that there's not, then I think there'll always be a market for like finance content. And so that's like, it's possible that crypto will come to be like an alternative asset class that investors look at among several.
Yeah, I think that's a very possible outcome where like the, let's say, more knowledgeable crypto content creators who are not like trying to do like hypey videos from their Dubai penthouse or whatever. They'll like start to give like guest lectures at like universities for finance classes, and like it's probably like just going to develop into, let's say, just another asset class in the mid to long run. I could see a similar path to that. Like, would you say that if you had to start over right now with like trying to grow an X presence and a YouTube presence centered around like mostly DeFi, would you recommend to do that, or would you try to find something else?
If I was starting that in 2025,
Yeah, right now, today.
I guess, I mean, the way to think about it is to start with what outcome you want. And I think this was like a mistake I made early, where I just like making it like mostly for fun. And like originally I wanted to get to 1,000 YouTube subscribers. That was my goal. I've surpassed that like many times over. But yeah, like many times over at this point. So, but I think it's good for people to think of the goal. If your goal is to get a job in the DeFi industry, then yeah, like you should make content about DeFi, and then like all you need to do is get in front of the right people, right? And then like, you know, you might only need like a few hundred subscribers, but if they're the right people, then that could land you like a dream job. If I were starting it now, honestly, I would probably focus on prediction markets, because I think that's one of the areas where you're seeing like a lot of trading activity, a lot of excitement. You're seeing like a steady inflow of new people. Making content is kind of like starting a business, in the sense that selecting your market is very important. And if you select a market that has a constant inflow of new people, then it's kind of possible to grow, even if you're doing many things wrong. If you select a market that has like, that's like in a secular decline, then in the case of content, a decline would mean like declining audience. It's going to be very tough to grow, even if you're doing everything right.
Yeah, I think that makes sense. I personally very much hope that you keep going, because I've always enjoyed watching your content a lot, and I think there are quite a few people in our audience as well who are regular viewers of your channel. And yeah, I think this was one of the most like candid conversations I've ever had on this pod. So thanks a ton for joining us. Where can people find you? Where can people find DeFiLlama, and how can they sign up to Llama AI?
Totally. So you can find me on X at Pat F. Scott. You can also find me on Substack. I've been posting there much more at dynamodefi.substack.com or youtube.com/dynamodefi. DeFiLlama is DeFiLlama.com, or the Twitter's DeFiLlama. And you can sign up for Llama AI through our subscription page, or by clicking on the Ask Llama AI button at the top of the website.
Very nice. Thanks a ton for coming on, Patrick. I really enjoyed this conversation, and I think that you guys have built a great product with Llama AI. Definitely makes researching in DeFi a lot easier, and a lot less tiresome of like having to compile all of this data manually. Yeah, thanks a ton for coming on, and hopefully see you again on the Odyssey pod soon.
Thank you very much. It was a pleasure to be here.